Good morning, good morning, good morning, good morning, sir. Good morning. Good morning, sir. Yes, how are you?
Hello, how are you?
Yes, I'm okay. I'm okay. I'm okay. How is everything?
Everything is okay. It's okay.
How is the market?
Up and downs as usual.
Which instruments do you trade?
Boom and crashes.
Which ones specifically? All of them.
No, B300, C300, and C500.
Okay. How are they moving lately? How have they been?
I was like for the past 2 days, I was trading Boom 300, but it was just doing because what I do, I only trade some ticks only. So Boom 300, I used to like yesterday. I was selling it.
Okay.
Yeah. So today I didn't even analyze anything.
Okay, let's start with what you trade. You trade Boom 300 and what?
And Crash 500
And Crash 300.
and Crash 300, exactly.
Okay. So this is Boom 300.
Yeah, Boom 300.
Boom 300, just a zoom out, a complete zoom out, you see that Boom 300 is a new instrument. Yes, in as much as it's a new instrument, if you check what it did here, just looking at the random moves that it likes to do. If you check what it did, where is this? Okay, here. If you check what it did here, okay, where is my, okay. Right, if you check here, what is this thing? So do you know that Crash 300 is more volatile than all the?
Yes, I know that Crash 300 is serious. You must when you're trading, you must use proper risk management. I know.
That's good.
Mm.
At least you know.
Even this Boom 300, it's kind of also
It's volatile, yeah.
Yeah.
So it's like the first one is Crash 300, then there's Crash 500, then Crash 1000 is the last volatile one.
Okay.
When you're comparing the volatility.
Okay.
So Boom 300, you say you trade ticks. Why do you trade ticks on?
I'm just used to that. I'm still learning. As I told you, I'm still learning. So I tried by all means to just trade ticks.
Because what are you going to do now in a scenario like what is happening now? Because right now, Right now, when we have a trend line like this is a major trend line, right?
Mm.
When we have a major trend line like this, what this simply means, according to me, when it comes to trend lines, let me see if I can put, according to me, when it comes to trend lines, when a trend line is like that, above the trend line, that's my buying zone. Then below the trend line, it's my selling zone.
Okay.
So what are you going to do in a scenario, in a situation where the zone that you're in, it's a zone not of ticks, a zone of spikes or booms, like this.
Mm.
So right now it's in a buying zone. In a buying zone,
Okay.
in a buying zone, we're in a buying zone, and as well as market structure is now bullish. Why are we saying it's now bullish?
Okay.
If we look at here, it actually formed a double bottom before going up. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher low, higher high, higher low. So right now we are coming most probably from a higher low. You can actually go break the A and form a higher high, because the market structure is now bullish. So,
Okay.
right. So the next thing that you need after you have identified whether you're in a buying zone or a selling zone, you need to identify major levels of support or resistance. Let me go to the daily. Right, this is the daily time frame. And on the daily, I just want to mark areas where the market can reach to and respect. So here, if you check this area, it was respected here, respected, 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 respected here. That is a very key area, this line. Then here as well. So the more the number of touches at an area, the more the number of touches, the more it's relevant, the more it can actually hold for longer. So those are the levels that you're looking for, levels where the market touched so many times. So that is the first one. The second one is here, touch, 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 touch. So most probably it's going to reach that area before maybe coming down and going up again. So once we break that level, we're looking forward to coming to the next level there.
Okay.
Right. So that is the level, first level there. That is the first level there. So even to catch these buys, you could have even used your simple Fibonacci, point A to point B here, like this. Right. According to Fibonacci, what we do, point A to point B, right? Then you could have entered here on the 50% or the 61.8, just this whole zone. You could have entered buys here. This was the retracement level. So from there, from the retracement level, the first target is always the 0%. Went back to the 0%, came back again to the 38.2. You could have entered buys as well there. So either you could have entered these buys and just held all the way, because according to Fibonacci, TP1, we are saying TP1 is here. TP1, we are saying at 0% there. TP2, we are saying at negative 27. Negative 27%, that's TP2. Negative 61.8, that's TP3 for me. Then the last TP, which is TP4, it's negative 100%. Negative 100% simply means it has completed a full rotation. That market has moved a full rotation to the particular side that it's going. So basically, when you see it going to negative 100, simply means it has completed its rotation. So TP1 hit, TP2 has been hit, TP3 as well has been hit. Once you see it breaking this level here, which is the current resistance that we're having, once you see it breaking this resistance there, that's a resistance. Once you see it breaking this resistance, we are looking forward to either the negative 100% or this white line that I placed there for the target. So that is what is happening on B3. So just in case it doesn't break this resistance, just in case it comes back down, that is coming back maybe to the 0%. Test this 0%, which is also where the trend line is. Once it reaches here, you're simply going to buy there on the trend line and the 0% as well. Then we go. You understand?
Yes, I understand, sir.
So for today, that is it for B3. Your ticks that you are wanting, it's not actually the moment of ticks right now. It's in a bullish market. And when we're in a bullish market, we focus more on buying than selling. Right?
Okay. Okay. I understand.
Many people, they actually prefer booms than the ticks.
Yeah. Most of the people, they do like that, yeah.
You just have to be comfortable to both sides, both the ticks and the booms. That is trading.
Okay.
Yes. So B3, do you have any questions there?
No, I don't have. But I might need that picture. I might need that screenshot. Yeah, I might need it.
You get it. Okay. I'll give you after the session. So let's look at C3. C3. Okay. Right. Crash 300. We are in a bearish market. So you see both of the instruments that they are actually spiking and booming. Lower high,
exactly.
lower high, lower high. That's a lower low, lower low. Then I'm expecting another lower low here. So it's actually downtrending, Crash 300. Can you see that?
Yeah, I can see that, yeah.
Right. Once you've seen that it's downtrending, you need to know that there are going to be more sellers than buyers. When there are more sellers than buyers, you need to focus on the side where the big guys are, which is the selling side. So if you see, you can also place a downward channel like that. This downward channel can actually guide you in trades. So you can actually, that's why I said you need to be flexible to both sides, the buy side and the selling side. So C3, I've did that downward channel. That downward channel is more than enough to guide me for the next following days or next following weeks. This downward channel is more than enough. So once you have that downward channel, another thing that you need is your significant levels of support and resistance. That is a key level, respected here, and respected there. The market can reach here and bounce on that line. So I've identified my major areas that are important for me as of now. I have the downward channel, and I also have the significant level of support. All right, so right now we are downtrending. As we are downtrending, we need to identify selling opportunities. First target is this major support here, this white line. Right?
Yeah.
Okay. So you just go to a lower time frame, the 4 hour, to identify if ever there's anything else to take note of. Let's see if there's anything else to take note of. Right. So this is our downward channel. Our downward channel as we have drawn it like that. So on this downward channel, before this market came down, if you check here, as it reached this top of the downward channel, it began to consolidate a bit in a downward way though. This was a form of a consolidation before breaking out of the consolidation. So right now, most probably what it can do, it can go back to retest the break of that consolidation. That is what we now need to identify. The break, where does this break happen? You also need a form of a trend line like this. Like this. So check this trend line. Check this trend line clearly. Check that trend line was respected, respected, then boom, we broke. So this kind of broke below this trend line, right? So right now, this next candle right now, which has 2 hours to close, we expect it to close below. If it closes below this zone, we are safely safe to continue taking sales all the way to this target here.
Okay.
So that is a 4-hour candle. It still has a lot of time to actually crash, because crashing does not take time. Crashing does not take that much time. It can even crash in 30 minutes and close below this zone that we're expecting. So the best sell entries, I actually advise us to wait for the market to close below this zone. Once it closes below this zone, we take our sales. Our TP is this white line here. This white support there. That is the target for our TPs. So best entries are below this trend line. Let me see, for someone who might want to enter as earlier. Earlier entries, you actually can use your Fibonacci, but you actually can use your Fibonacci. And as well as if the entries are earlier, make sure that you always minimize your risk. You minimize the risk so that when the best setup or the best safe moment, which is below this trend line, comes, you actually, that's where you can actually enter with a reasonable risk management. So here, either it's going to bounce here on the 38.2. If it bounces on the 38.2, it means the momentum to the downside would be very strong. So for someone who wants an earlier entry, you can mark this 38.2 and maybe the 50%. But I don't think it will reach all the way there. So you can mark those 2 levels. Once you have marked them. So here, if this candle doesn't close below here, what can happen is this market can actually retrace either to the 61.8 or later here to the 78.6. So once it goes all the way there, it can give you room to actually enter as well from that top zone. Once you enter down 78.6, that's where, even after the break again of this trend line, you can actually scale in more trades on the break and retest of that trend line. So you simply need to wait for confirmations. Wait for confirmations before you jump into the trades. Wait for the candles to close below your zone, above or below your zone, then you enter. So this is the worst case scenario that I'm expecting, whereby this current candle that is loading, whereby it closes back inside the zone. Once it closes back inside the zone, and we're expecting maybe to crash there on the 78.6, maybe somewhere there, then continue going down, since we're in a major downtrend. You understand?
Yes, I understand.
So that is the worst case scenario for crash 300. But if it does close below our level, which is this trend line, we are safe to take sales all the way to our TP, which is this white line.
Okay.
All right. So if what we're expecting does not happen, we don't enter. We just simply wait and observe what is currently happening. All our scenarios, either one of them has to happen. Either it has to close below the trend line,
Hi, Mr. Tom.
or it has to actually go back
How
to
are you?
78.6, then go down. So I hope it's clear, the CRASH 300. I hope it's clear. Mr. Clive, I hope
Yeah,
you
it's
understand the CRASH 300. What is happening? Do you understand?
Yes.
Okay. So the last one is let's look at CRASH 500. Then from CRASH 500 we look at the VIX. Then from there, I think it would be so CRASH 500. This is CRASH 500 4-hour time frame. CRASH 500, the 4-hour time frame. This is CRASH 500. CRASH 500 will have been bullish, which is the opposite of what CRASH 300 is doing. CRASH 500 has been bullish all this entire time. So this was the transition from bearish to bullish. You could have caught this this bullish movement from the bottom here.
Okay.
This downward channel, you could have entered earlier on the break of the downward channel. So this was the downward channel. Then the break happened, break retest here. So that zone was a very key zone. You could have entered and jumped into this uptrend earlier, especially you, Mr. Wesley. You could have actually started catching your ticks for CRASH 500 here. Did you see that?
Yes,
So CRASH 500 is the only one that I'm saying that is in a bullish market so far. So I can actually as well mark my targets for CRASH 500 to see how far it can push. How far it can push. So let me see. Let me see. So that is also another target that I have at the top. I'm respecting here and there. Then here, I also have this target here. That target here, it was reached. If you check, the market came, reached it, then closed below. That is a resistance. That is a resistance as well. So same as here at the bottom here, I also need another level, which is most probably this area here. So this area is also another level of, right now it's acting as a support now. It's acting as a support because respected, it was a resistance, but broken. So many entries, you could have caught them either here at the break and retest of the downward channel. You could have started buying. When you start buying there, your first target is always the previous high, which was this higher high here. Then when you see your higher high being broken, because we are now in a bullish market, when you see your higher high being broken, you know that it's going to make a new high. So meaning after the break here, you could have even bought more. Your target now, you're looking at this next high, which was this level, of which it was reached. So first target, second target, it was reached. Then came back to retrace, which was now forming a higher low. At the higher low, you could have entered using your Fibonacci. If you placed your Fibonacci, if you used your Fibonacci, if you check that higher low, it was 38.2, exactly on the 38.2. That's where, can you see that?
yes, I can see it.
38.2, that's where it bounced. And on the 38.2, if you see the market bouncing on the 38.2, it means the momentum to the upside, or it will be very strong. So it doesn't need to even retrace all the way to the 50% or the 61.8. So many people, what they're used to, they're simply used to the market coming back to retrace this broken higher high, which didn't happen. So when you're using Fibonacci, you actually can take advantage of entries where the market does not even come back to this broken level here. So it didn't even come back all the way, but traced on 38.2. So on 38.2, you could have actually taken buys as well. Then the break of this resistance, you could have entered more buys, the retest, same as the retest as well. You could have entered more buys. So remember what I said about the Fibonacci. Fibonacci, once you enter on the retracement, which was 38.2, your first lookout is the 0%. Once you see it breaking the 0%, you're looking at the negative 27%. Once the negative 27% is broken, you're looking at the negative 61.8. Once the negative 61.8 is broken, we are looking at our final TP, which is negative 100. So according to me, this crash 500 move, it swinged all the way. It made a full rotation from the zone where it broke out all the way. It made a full rotation because it reached negative 100% Fibonacci. You understand?
Yes.
Right. So it made a full rotation. So what do I do now? You can also place another channel to the upside because right now we're uptrending, remember. You can also place another channel to the upside, something like that. You can actually place another trend line at the top, something like this. Right. So that is the upward channel that we are currently following. First touch, second touch, third touch. So look closely here. First touch, second touch, third touch. These are moments where you can actually scale in more trades here. When the market is touching the trend line so many times, first touch here, second touch here, third touch here. These are moments of just entering here. Then the break here, you could have entered the retrace here, which was 38.2, you could have entered the break of the resistance, you could have entered all the way to negative 100, which I said is the final TP when we're looking at a full rotation. So right now we can actually place a new Fibonacci because this one, the full rotation has been reached. We no longer need that one. So a new Fibonacci, you look at the recent higher low, connected to the recent higher high, like that. Can you see this?
Mm-hmm.
Right. So according to this one now, check where it retraced exactly in between the 50% and the 61.8 and on the trend line as well. In the zone, this is actually the golden zone. We have a trend line and you also have the 61.8. That was also a good moment to start buying. Did you catch that one? For the past 1, 2, 3, 4, 5 days, or actually 5 days of buying. Did you see that it was buying for the past 5 days?
Yeah, I discovered it was buying, but I was doing scalping. I was not like,
you know, scalping, you don't really harvest the full move of a trade. You don't really get to harvest out of it because scalping, you enter, then a few minutes later you come out, you enter, you come out. So imagine now such moves like this where the market moves your direction for something like 5 days. So imagine if you could have just held this buy. You're holding this buy. Our first target is still the same. We are looking at our Fibonacci, the 0%, right? Yeah. I'm looking towards the 0%. Once we break the 0%, we're looking at the negative 27. Once we break the negative 27, we're looking to the next negative 61.8. Once we break the negative 61, that's where we're looking at negative 100 as a full rotation as well. So Fibonacci is also good when it comes to targets. Fibonacci is good when it comes to entries and exit points. Entries and exit points, the Fibonacci is very good. So here we're currently pushing all the way to the upside. We are pushing all the way to the upside. Our first target is the 0%. You can actually go to a lower time frame. So this major analysis, you're actually doing it on a higher time frame to get the full bias of where the market is coming from and going. Then for entries and whatever, that's where you go to smaller time frames. Your 30 minute, your 15 minute, your 1 hour. Those are time frames for mainly confirmations and as well as entries. You understand?
Yes, I understand.
So here you can actually place a trend line. If you check this trend line, it was kind of broken. I just want to draw it clearly. Broken. Where was it broken? So this is the trend line here. This is the trend line. It was respected. Remember what I said when you have a trend line. Below your trend line is your what? Your selling zone. Above your trend line, it's your buying zone. So right now we are above the trend line, right? We are above the trend line, meaning we are in a buying zone, right?
Yes.
We are in a buying zone. According to simple structures, what I know about simple structures is that, let me just hide my Fibonacci. According to simple structures, when you see a structure like this, where the market, it pushed all the way, then it begins to downtrend, then breaks that downtrend. Most probably, this next move can actually be equal to this initial move. Most of the times, this initial move inside can actually be the move outside of the channel. Do you get me?
Yeah.
It's something like this. Check here. Move, push, then boom, channel, push. So here, where is the channel? This is my channel. This is my channel, right? So this initial move, most probably is going to be equal to this outside move. If you check, most probably they are of the same length. The initial move. So breakouts of such moves like that, those are moments that you actually need to take, because most of the times it actually goes a long way. Check initial, then you can as well wait for the break. You know that it's going to move very much. Check as well. Same as here, initial move is this one. Initial move, then boom, we go down, outside move. So how can I also know where the outside move can end? I just mark this initial move. That is the initial move. Let me just mark it like that. Then I place it outside of my zone. I place it outside of my zone like that, like this. So most probably, we are going to, it's going to end, this move is going to end somewhere around those levels, of which I think that is where we have maybe the negative 27% Fibonacci. Let me just place the Fibonacci. Point A, point B. Yeah, you see where it is. Exactly on the negative 27%. So right now, I'm expecting a huge push to the upside to the negative 27%, of which it doesn't go in a straight line. What you simply do when you go to a smaller time frame is to identify the entry point. For example, right now it broke out of this channel. Does it mean it's going to retrace? You just need to discover that. Is it going to come back fully here before going up, or is simply going to go up from there? You simply need to discover that. You simply need to discover that. So whenever you go to a lower time frame, let's say the 1 hour, whatever, they are simply going to look for confirmations, or for confirmations of the entry points that you have identified on a higher time frame. The entry points that you're expecting to happen on a higher time frame, when you go to smaller time frames, you're simply waiting to see, is the market on my entry point, or is there another confirmation that I can look at? So according to, as I said, remember what I said, you can also use your Fibonacci for your entry points. Point A to point B. Check where it's bouncing, 38.2. It's respecting the 38.2. What did I say about the 38.2? When you see the market respecting the 38.2, it simply means the momentum to the upside is strong. So somehow, we have established a level of support on the 38.2, which is this level here. The market has established support there. So we have support there, then we have resistance here on the 0%. So here, either someone can go to a lower time frame and maybe get an entry confirmation if ever they want to enter in between here, or you can simply wait for the break of the 0%. Once the 0% is broken, you can actually enter buys. You can enter buys according to the higher time frame Fibonacci that we used. That level that I marked at the top, that is the 0% level for the higher time frame Fibonacci that we drew. If you remember, that is the 0% for that Fibonacci that we drew on the higher time frame. So here, according to this simple Fibonacci, I can see that already it's bouncing on 38.2. So somewhere you're supposed to already be inside this buy, because this buy started 4 hours ago. Did you notice that?
No, I just came in the chat now.
Okay. So
Yeah.
you can actually see that this buy started 4 hours ago. 4 hours ago. Let me just mark the level so that you see how you could have even entered the buy. That is the level. Let me go to a 1 hour, 30 minutes, or 15 minutes. Right, this is a 1 hour time frame. Immediately after the closure, if you check here, immediately after the closure of this candle, right? Immediately after the closure, after here, if you check here, it made this first hammer, then this second bullish hammer. So here on the hammers, you could have, after seeing this bullish hammer, you could have entered your first buys. You could have actually started buying. Immediately after this bullish hammer, you could have actually started buying your stop loss just below the level like that. Let me see, like this. Your stop loss just below the hammers, like this, like that. So first target, second target is all the way to the top, all the way to the top. So targets, you just follow what we've been saying. You just look. If ever you forget about the targets, just go through the videos once again. Go through the videos and look at what we said. You understand?
Yes.
So right now, it's going up. Another entry point that one can look at is this. If you check, this is something like a double bottom. Can you see that? Down,
Yeah.
up, down. Double bottom always has a neckline. The break of the neckline can also be an entry point. Once it breaks this neckline, you can actually enter buys. First target, second target, I'm looking at that one at the top. So the break of the neckline right now can actually be an entry point for someone who might want to take buys for the CRASH 500. The break of this neckline, neckline here, which is this level here, of which it's sort of like it has broken already. It seems like it has broken on the 1 hour. So that break there, it's actually an entry point as well. It's an entry point. That break as well, it's an entry point. Entry point there. So once you enter there, your stop loss would just be tight below the area. Just wait for that candle to reject. Once it rejects that level, you enter your buys, your stop loss just below the neckline. You understand?